Hey, what's up everyone? Welcome to our platform tutorial. This is going to be focused on order entry, specifically for a bearish put spread. So this is an option trade where we're buying an option and then selling another option against it, resulting in a net debit when we enter the position. Now, this particular order entry tutorial is going to be an all-inclusive order entry, which pretty much means that we're going to buy to open this position, and we're going to have attached to that our stop loss and our target. So it would get us out automatically if we hit either one of those prices. Now, the way we set these trades up is we trigger everything off of the underlying hitting a stop loss, hitting a target, hitting our entry price. We're just using the option as the surrogate. Our option position is the one that we're using to actually make or sometimes lose money, but we're not actually buying or selling the stock itself, but we're trading the options using the stock as the underlying entry and exit prices. And so you'll see here on this Cisco trade, I am expecting a breakdown below 41.69. This is actually a trade that we talked about recently in our live trading sessions. So all of our members have an opportunity to participate in this trade on a breakdown below 41.69. Now, if prices were to break down and we were to enter and then prices were to reverse back up above 43.08, there's really nothing stopping the stock from heading all the way back up here to 47.30. So we're not really interested in holding on to this option position past 43.08. So anything north of 43.08, we want out. If prices hit 38.09, that's marking our target one. We're going to want out of our position. Now, in this trade, I'm just going to use one target. But if you were to have multiple targets, as we do at 35.89 and 33.91, then you could set this up in a similar fashion as I'm about to show you right now. But we're just going to use one target to keep it simple. So first and foremost, I always analyze my trades first. So let's just go ahead and focus on the fact that I have analyzed a 42 by 36 bear put spread that has let's see, right now it's quoting $1.97. So if we wanted to enter this trade right now, I'll make it real simple for you. But it's quoting about $25 risk for $138 profit at target one. So it's a great risk reward relationship in this particular trade. So if we wanted to enter this trade right now, there's a couple ways to do it. I always start out in the Analyze tab. I personally never start out in the Trade tab because I always want to analyze my risk reward before I trade anything. And if I start in the Trade tab, then I'm just going to have to send my trade to the Analyze tab to analyze it and then send it back to the Trade tab. So I always just start in the Analyze tab. I kind of repeat myself a lot because I want to get this point across. Analyze first, trade second. So once we've analyzed the trade, we could do a number of things. So the first things first, if you've used the Thinkorswim platform before, you know there's a lot of right-click functionality on your mouse. So get used to the right-click on stuff. There's a whole bunch of menus that'll show up that are really great options underneath those menus. So what I want to focus on now is just right-clicking anywhere on this simulated trade. And if you wanted to send it to the market right now, you could just confirm and send it, and off you go. But I prefer to actually create a stacked order out of this, which is going to stack my entry, my stops, and my targets all in one swoop, and I don't have to worry about it again. So for this, we're going to have to create a duplicate order. So I just right-clicked on the simulated trade, and then I'm going to select Create Duplicate Order. And you'll notice that that brings up the order entry toolbar from the very bottom. If you wanted to go to a chart or you wanted to go somewhere else in the platform, you'll notice the order entry toolbar just disappeared. But at any point in the platform, you can notice this little tab right here at the very bottom that if you were to click on this, it brings your existing order up. So at any point in the platform, you can just look down and actually see your actual trades there. So what we'll do is we'll use this and we'll say, this is our entry order. And by default, the Thinkorswim platform puts all of your advanced orders at a single order. It's just a single order. That's all you're allowed to do is either enter or exit the trade. But I actually want to attach an order to this. And so because I am triggering the entry and the exit off of the underlying stock price, I'm going to choose what is known as first triggers sequence. So first triggers sequence is if I have one target and I just want to get out at one target and I have one stop loss and I want to be done with the trade. Easy peasy. So first triggers sequence, which means for the first order to fill, we got to be able to get the right price. Once that order fills, watch this. I'm going to right click on this order and I'm going to create an opposite. Now the opposite order is going to be the exit position to sell the 42 puts and buy back the 36 puts. But we have to set the conditions that we would want to get out of this, long put, spread position. Under what conditions would we want to get out? So the Thinkorswim conditions are going to be all the way to the right where you'll see this little cog right here. So I'll click this little cog, which looks like a little gear. And then what's going to happen when I left click on that is you're going to get an order sort of conditions box, order rules. So I'll bring it up to the screen here. And everything on the upper fold here, above the fold, would be the actual sell order itself for the put spread. Down below the fold where it says conditions, and you may or may not have to expand this menu here, but you want to expand this conditions menu. Because under the conditions, you're going to be able to type in the symbol and the trigger and the threshold for where it is you want to, exit this option position. And so we have a number of conditions that we want to exit this option position. So if I just go under this symbol and I just left click, it's going to drop in Cisco because that's the trade that we're working on. Method, mark is the mid price, trigger. So first of all, under what condition do we want to exit this put spread? Well, number one, if the price is north of 43.08, which is our stop loss over here, then of course we want out of this position. If Cisco is ever south of, so less than or equal to, we'll just put our target one, which is at 38.09. So 38.09 says if the price is below 38.09, sell the option position. If the price is above 43.08, sell the option position. And whichever one of these conditions is met first, it'll get us out of our option position for either a small loss, because it hit our stop loss, or a profit of at least 3 times as much because it hit our profit target of 38.09. Now, to keep it simple and to ensure that you're going to get out, I always suggest using not a limit order because we have no idea how much the option spread is going to be worth at the time these conditions are met. So I always say if you want out and you just want to be done with the trade because it's hit your stop or target, just use a market order. And I would always use time in force good till canceled because you don't want to have to reset this order every day. And so I just leave it good till canceled. And if either one of these conditions are met, it will close this option position at the market price and the position is over. So if I hit save, it's going to save all this information. And now what this allows me to do is we'll go ahead and confirm and send, and that'll bring up the order rules and conditions and order confirmation box. So we want to buy this spread and we want to pay $1.97. Let's just say that we're entering this trade if we can get it for $1.97. And then if we get into the trade, and only if we get into the trade, this is important because we chose first triggers sequence, the second order in the sequence will not even be sent to the market. It won't be sent to the broker until the first order fills, which means you're not going to have a sell order waiting until you own the position that you're looking to sell in the future. And so first trigger sequence says, if we get into this position, then I want you to submit the second order, which is sell my vertical spread at the market price, but only if Cisco is ever at or above 43.08, that's our stop loss, or if Cisco is at or below 38.09. So those are going to be our stops and targets. And again, if you had multiple targets, you could set it up in a very similar way. But once we go ahead and send that, the trade is off and it is in. And we no longer have to really worry about this position because if we don't get in, then we don't get in. If we do get into the position because our limit price is met on the entry, then we should feel safe going to sleep at night. We should feel safe going out, leaving our computers because our stops and our targets are in. So if you have any questions, hit us up, support@tradersarmy.com. Until next time, bye-bye.